Welcome to week 13 of the F.I.R.E travel series. I created this series prior to us traveling to Europe for 3 months. If you're new to my channel, my name is Jake. My wife and I retired from our 9-to-5 job by investing into real estate, the stock market, so that we could achieve financial independence. So if you're new to the channel, welcome. In week 13, we started the week off by driving from Austin, Texas to Utah. We spend the majority of the year in Utah, but in the winter months, we move back down to Austin. We don't have a big car, so we crammed all of our things into our little Hyundai Elantra. We try to keep driving days to around 7 to 8 hours if we can help it. Driving with a 4-year-old can be very unpredictable, so we try to take it easy on all of us. And we've had pretty nightmare experiences when he was younger, so we've learned from those mistakes. We don't travel for more than 7 or 8 hours per day. Maybe that changes in the future. Some people dread getting into the car for an extended period of time, but we actually really look forward to it. I usually try to stay away from carbonated drinks, but I allow myself to drink them on road trips. This is part of the reason, I guess, why I look forward to them so much, talking about the road trips. But yeah, the energy levels are pretty elevated during road trips for us. After 2 days of driving, we arrived in a small town in the Rocky Mountains of Colorado. Most people opt to go for really expensive touristy places like Telluride or Aspen, but we much prefer lower key places, mostly because it's more affordable and less crowded. And this is even more the case when the summer prices peak here around July, August. It's just very, very expensive, especially in Colorado. So this year we're stopping off in the small town of Steamboat Springs. I've never been there before. I did a small Google search. They had some pretty affordable places. Looks like they have some really good, hiking trails around. So we're going to spend the time hiking and eating local food. Those are the kind of things on the list to do. When I say local food, I really mean like Chipotle or something like that, because first off, there's what local food do they have in that little town? Who knows? And yeah, it's Colorado. Everything is so freaking expensive. So there you have it. That's what we're going to be enjoying when I say local food. Despite everything being more expensive in Colorado, we really enjoy coming back here because we lived in Denver for a year before we moved to Austin. After the 2 nights in the Colorado Rockies, we're going to make our way to northern Utah, but more on that in next week's video. I'm excited to share that this video is presented by Snowball Analytics. Snowball Analytics is a tool that I use to analyze my dividend portfolio. You can check them out with the link in the description below and use promo code DGI to get the very best pricing. Someone asked the question, what are your thoughts on investing on leverage or even leveraged ETFs? I think investing on leverage is almost never a good idea when it comes to the stock market. Now, I never use the words investing and in leverage in the same sentence. You're not investing, you're speculating and trading when you're using leverage. So if you look at it from that perspective, it will help you to narrow down what you're actually doing when you buy stocks on leverage. You're not investing, you're speculating, and you're trading. The issue with leverage is it works great until it doesn't. I've noticed in my own experience, you're either a genius or an idiot when you look back on it. If investing in the market depends on you being a genius or an idiot, then I would say you really aren't investing and that you should, you're just really speculating. So with that understanding, I stay away from investing on leverage in the stock market the best that I can. I do use leverage when selling cash secured puts. Now, there's a few things to understand with this. The interest rate is kind of, arbitrage there because, there's brokerages out there, like for example, Robinhood. If you sell a cash secured put in the future, you're not paying interest until that assignment day comes, should you be assigned. So there's a little bit of, finessing that you can do with interest rates and leverage there, but still, this is not ideal, and I admit this, and I do this as part of a way, to generate a little bit more income, and I've talked about this in previous videos, but I see this as a form of trading, not investing. And I don't convince myself that I'm investing when in reality it's a trade. When I'm selling a cash secured put, in this case to generate a premium, it's a trade. It's not investing for the long term. And I acknowledge that for what I'm doing. So it's really important that you understand what you're doing when you're utilizing leverage. I've talked about cash secured puts in the past and how they fit in my overall strategy. I don't think everyone should pursue something like that, but if you invest the time and learn it, I think it can be a great way to generate a little bit more income, especially if you're not working a 9-to-5 job and you need a little bit more, you need to squeeze a little bit more juice out of the orange is how I look at it. And that's why I use, cash secure puts. Now, when it comes to 2x or 3x leveraged ETFs, I say stay away and don't touch them with a 10-foot pole. Leveraged ETFs are not like traditional ETFs. Their returns reset daily, and that is why you can see a leveraged ETF go down like 80% in a single year when the underlying index or stock is only down like 20%. So it's incredibly important to understand what these leveraged products are, and that's all they are. They're a product, okay? And not all products are good. And so it's incredibly important that you understand what you're actually doing. And I personally will not touch them with a 10-foot pole. I will never touch leverage ETFs. It's just something that I'm not interested. Like for me, it's like, everyone is different, but I see the risk just incredibly too high. Why risk it? And so that's why I stay away from them. The only time I see leverage as a reasonable thing to consider for your average person is when buying a physical illiquid asset like a home. But even then, you can get over leveraged and run into some serious challenges. That's just my 2 cents, though, from someone who's been burned in the past by investing with leverage. When you look at people who talk about, I lost millions in the stock market, or I lost millions in, real estate, 9 times out of 10 is because they were using leverage. So it works until it doesn't. And that's why for me, I don't even want to play with FIRE, even more so with, leveraged ETFs. I stay completely away from them. You can make a lot of money and you can lose a lot of money. And for me, it's just not my cup of tea. And so I stay away from them. But yeah, I'd love to hear your thoughts. If you haven't already, go check out Snowball Analytics. And thank you so much for watching. And I'll see everybody in next week's video.